Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else.
Welcome to another video on your channel Profit and Equities. If you like our content, please don't forget to hit the like button, subscribe to our channel, click on the bell button and choose all notifications to receive important financial updates from our channel at the earliest. In this video, we will be talking about 4 fundamentally sound stocks from Geojit Financial Services which could be potential future multibaggers. Now all of these stocks are fundamentally sound and we must go ahead and monitor them and enter these stocks when their levels become attractive. Also friends, if you like the content that we produce on our channel, please don't forget to share these videos because this motivates us to go ahead and keep making these videos for you. Please watch this video to know more. Now the first stock on the list is Escorts Limited, which is available at Rs 916.20 and the face value for this particular stock is 10. The symbol for it is ESCORTS. Now Escorts Limited is an engineering company which offers agricultural tractors and construction equipment. The company's segments are agri-machinery, auto ancillary products, railway equipment, construction equipment and others. Now the 1-year chart revealed that this company has been on a beautiful uptrend and it's only recently that there has been any semblance of a correction. The market cap of the company is 11,230.49 crores, which means that the company is a mid-cap one. The EPS is 28.12, translating into a price to earnings ratio of 32.58, which is largely in line with the industry PE of 29.77. The book value is 190.56, translating into a price to book ratio of 4.81. The company has a dividend yield of 0.16, whereas the promoter holding is below average at 40.07. Now, if you were to look at the reasons why Geojit thinks that this could be a potential multi-bagger, normal monsoon and more state subsidy for doubling the agricultural growth will continue to drive demand for tractors for FY19 as per Geojit. Escorts' expanded portfolio and technology upgrades in tractors has resulted in improved numbers both in the existing and newer geographies. Now revenue from construction equipment and railway segment will continue to reflect sizable improvement in FY19. They expect revenue and PAT to grow by 15%/23% CAGR over FY18 to 20, factoring 13% year-on-year growth in the tractor sales and 18% in construction equipment. Now Geojit expects Escorts Limited to trade at premium valuations of 25 crores FY20 estimated EPS given its strong earnings outlook and massive government push for road infra projects. Now the second stock on the list is Interglobe Aviation Limited, which is available at 1220.45 and the face value for this stock is 10. The symbol for this company is INDIGO. Now Interglobe Aviation Limited is engaged in the provision of passenger services. The company is engaged in the business of providing domestic and international scheduled air transport services under the name Indigo. The company's segments include domestic, which provides air transportation within India, and international, which provides air transportation outside India. The company operates on a low-cost carrier business model. Now the 1-year chart would reveal that this company stayed flat for the major part of the year, but then had a huge spike. But in the recent market correction and after posting disappointing results, the company had massively corrected. There was an additional overhang of high crude prices which also impacted the stock price. Now the market cap of the company is 46,914.93 crores, which means that the company is a large cap one. The EPS of 58.33 translates into a price to earnings ratio of 20.92, which is largely in line with the industry PE of 19.25. The book value of 157.24 translates into a price to book ratio of 7.76, which is on the higher side. Now the company has a debt to equity ratio of 0.5353, whereas the return on equity is 0.4131. Now the company has a good dividend yield of 2.79%, whereas the promoter holding is also very strong at 74.93%. Now if you were to look at the reasons provided by Geojit, Interglobe Aviation, which is the parent company of Indigo, is one of the most efficient low-cost carriers with a market share of 40% in the Indian aviation sector. Now, Indigo's passenger traffic grew by a robust 31% CAGR versus industry growth of 15% CAGR over FY14 to FY18. Going forward, expanding market presence through fleet addition and firming up its regional connectivity plan augurs very well for the growth of this company. Also, Indigo's fleet comprises of 15% more fuel efficient models, which will cushion its margin and market share even at times of higher oil prices. Now, Geojit believes that in the longer term, risks related to volatile oil prices is likely to come down. They remain constructive on Indigo given the ROE of 40% plus, efficient operations and its strong balance sheet. Now the third stock on the list is NBCC India Limited, which is available at 84.90 and the face value for this particular stock is 1. Now the symbol for it is NBCC. Now NBCC India Limited, formerly National Buildings Construction Corporation Limited, provides civil engineering construction services. The company operates through three segments: project management consultancy, real estate development and engineering, procurement and construction, etc. Now, if you were to look at the 1-year chart, you would see that this company was on a beautiful uptrend towards the initial part of the year, but then has severely corrected. The market cap of the company is 15,282.00 crores, which means that this company is a mid-cap one. The EPS of 1.85 translates into an expensive price to earnings ratio of 45.89, which is much more expensive compared with the industry PE of 30.60. The book value of 9.30 also translates into an expensive price to book ratio of 9.13. The company's debt to equity is 0.5865, whereas the return on equity for this company is 0.1939. The dividend yield provided by NBCC is 0.96%, whereas the promoter holding is a very strong factor for this stock at 74.29. Now, Geojit says that NBCC is a Navratna enterprise engaged in project management consultancy, engineering, procurement and construction and real estate businesses. The current order backlog of rupees 80,000 crore provides strong revenue visibility for the next 5 years. Now, Geojit expects execution to ramp up in coming quarters as rupees 10,000 crore worth of redevelopment projects is expected to start at ground level with an execution period of 2 years. NBCC is at a sweet spot considering its huge order book, limited competition and expertise in executing large projects. Now, big projects like Pragati Maidan worth 2,500 crores, irrigation project in Maharashtra worth rupees 1,000 crore, redevelopment of Nauroji Nagar, which is worth 2,500 crores, have already been started with an execution period of 24 months. Given strong earnings outlook and execution capability, they continue to maintain a strong buy rating for the stock. Now the final stock on the list is Ashok Leyland Limited, which is available at rupees 142.25 and the face value for this stock is 1. The symbol for it is ASHOK LEY. Now Ashok Leyland Limited is a holding company. The company is engaged in commercial vehicles and related components. Through its subsidiaries, it is engaged in manufacturing and trading in medium and heavy commercial vehicles, light commercial vehicles, passenger vehicles, automotive aggregates, vehicle financing and also engineering design services. Now the 1-year chart is a beautiful uptrend, and if you were to look at it, there's only been a correction in the recent few weeks. The market cap of the company is 41,752.19 crores, which means that the company is a large cap one. The EPS of 5.32 translates into a price to earnings ratio of 26.74, which is much cheaper compared to the industry PE of 37.26. The book value of this company is 26.23, translating into a price to book ratio of 5.42, which is a bit on the higher side. The debt to equity for this company is also a bit high at 1.6935. The company has a dividend yield of 1.10, whereas the promoter holding for this company is below average at 45.50. Now Geojit says that Ashok Leyland is the second largest commercial vehicle manufacturer in India, and it is expected to witness numerous tailwinds like government road infra spending, strategy of defense and electric vehicle spending. Now Ashok Leyland's growth in the higher tonnage vehicle was 247% on a year-on-year basis post the implementation of overloading ban in some northern states. The industry is likely to witness a demand of 600 to 700,000 vehicles if 15-year ban is enforced across the country. Now Ashok Leyland holds 95% market share in this category, which is 35.2 tons to 40.2 tons, and will be a direct beneficiary. They expect Ashok Leyland's revenue to grow at 17% CAGR over FY18 to 20, factoring 13% volume growth in medium and heavy commercial vehicles and 23% in its light commercial vehicles business. Now friends, please don't consider this to be recommendations on our part. This is not our own research, and this was published as part of an interview on one of the premier financial news channels. We'll be providing the link to the original article in the description section below for you to go and build more conviction around your investment decision. Always consult your financial advisor prior to acting on any of the information that you ever see on this channel. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.